Good morning, member Steve here from theturtlefollower.com, where we teach you how to stop predicting and start reacting. Hope everyone had a great week. We're going to take a look at the portfolio on Saturday, December 12th, 2015 with your weekend update. As always, if you're watching this anywhere outside the premium membership, whether it's on Twitter or YouTube, please note that you are getting this about 30 days after it's delivered to premium members. So if you were looking for those real-time updates and real-time trade alerts, you need to sign up for a membership at theturtlefollower.com and get access to the members area and all of the unlocked nightly recaps that we offer. Other than that, let's get started with our review. So as we discussed in the stock market outlook video, market in general just looks like it's starting to roll over. We do have some key areas in place to the downside, so I highly recommend going ahead checking out the stock market outlook video. Essentially, in a nutshell, what we're looking at is some potential follow through to the downside to test some of these trend lines that we have in place, test some of these key levels on the S&P, the Nasdaq, and the Dow. The Russell is a completely different beast. That one just looks like it's flat out rolling over. So depending on what school of thought you're in, you can consider that the Russell is going to lead us to the downside, or you can consider that 3 of the 4 major indices look like they're experiencing a typical pullback with some key support areas still below us. So I'm in that group. I think that we see a little bit of downside, but maybe that sets us up for a nice little rally. Again, we just use the stock market outlook video to really judge and gauge our expectations as far as what we're doing for the portfolio. As you know, trading portfolio, we go long and short, so we are more weighted to the short side, and with that we experienced very little in the way of market pullback this week. We did get hit a little bit, but Friday, when the market was down almost 300 points, the portfolio was down about $20. So that's just one of the great ways that we use the short trades to our advantage. They continue to work. As long as they continue to work, we'll stay in them. When they stop working, we'll get out, and hopefully then the market goes to the upside. We can go ahead, add some more long positions on, and just ebb and flow with the market as the market goes. Now, as far as the core account goes, the core account obviously did get hit because it's a long only portfolio. With that, we have 2 exits this week. We're going to look at exiting FISV, which we'll go over in a little bit, and we're going to look at exiting Tyson, which broke down below the previous day's low. We talked about being very aggressive with that one. So with those 2 trades, based on the portfolio as it exists, as I said, as of Saturday, December 12th, Tyson, we're going to take in about a $958 profit, and FISV, we're going to take about a $50 profit. So all in all, about $1,000 taken out of these 2 out of the market, bringing our performance lower obviously for the week, but we continue to just knock away some gains. The core account went down about 1.4% this week. The trading account was down about 1.25%, and the S&P was down about almost 4% this week. So a big drawdown in the S&P. Obviously we experienced some loss, but not nearly as bad as it could have been. So I'm happy to report that we did perform very well in all the accounts across the board. Nothing near what the S&P had pulled back. So right now, since inception with the model portfolio back in July and the trading account, obviously most recently in early November, we're pretty much outperforming the market. We're up 5.5% on the core account. And down slightly on the trading account, and as I said, the S&P, down, or is up 1.86, but down, over the last month or so. So that's how the portfolio shake out. Let's take a quick look at our existing positions in the trading account. Okay, so let's hop on over into the trading account. We'll go through each of these quickly, and then we'll look to potentially add some new trades to the watch list and new trades to the trading account. So first one, APC, we're up 9.62% in this one. And here we are looking at this trade. Again, it was a simple breakdown from a weekly chart. It then consolidated on the daily chart. And now, sure enough, here we are. And we are moving sideways. Broke down on the daily, got in the trade, and now we've had a couple nice days of lower action. So this is one, again, you got to kind of gauge what you're looking for. I think the market continues lower this week, but doesn't mean we can't have some snapback rallies. We had a lot of those in ATI this week. We had a lot of those in LUV, moved down almost 10% one day. ATI was up 14% in one day. So even with those big moves against us, we still just followed our process and we were still able to outperform the market. So yes, we didn't take in a profit for the week, but we did outperform the market for the week, so which is a great sign that we're doing things the right way. So here, APC, I'm going to actually take my stop and move it down. I don't think it should really go back above Friday's high if the market is going to continue lower. You could also wait for it to potentially consolidate again, all right? But I like to be more aggressive with short trades. That's just the way I trade. I like to let the longer trades run. Short trades, they kind of give it to you quick, and then they snap back against you quick. So I like to try and take my profits very quickly on short trades, whereas I like to let the trades in a long trade work and run a little bit more because, you may get the NVIDIAs or the ATVIs where you can pull in 20-30% if you just let it work. With a short trade, I'm just, it uses more capital because it uses a little bit more margin. You're always at risk for, some bad news. Your risk is not what you put in the trade. It's a different type of trade. So, I like to limit the risk in those as quickly as I possibly can. So I'm going to move my stop down to about 51 in APC. BDX, we're playing to the long side, and this one, again, just working. It's breaking down below that trend line. But, here, looking at this as maybe it's going to go ahead and move a little bit lower, let that 50-day moving average catch up. But for right now, obvious area of resistance is right around 155. Stop stays in place. CF Industries, one we just entered the other day. Again, this is one, you can be very aggressive with it if you want. You can let it work. But here, basic trade setup was a breakdown from the weekly pattern. Sure enough, we got then a breakdown from a daily pattern. If you want to, I think you can probably go ahead and move your stop here to 43.85, even though it's below the trend line. I would consider this 3-day move a small little box, and that's exactly what I'm going to do. Okay, so 43, you guys know me, I like round numbers. Let's call it 44. All right, 44. FFIV, the newest trade in the portfolio. And again, we had this big breakdown from a huge weekly consolidation. It then broke down on the daily chart. All right. And here you can see you have a potential trend line up here, and you have a potential trend line here. All right, so with this one, just let it work. It's not really doing much of anything yet. We do have a nice little profit in it already. But again, just let the thing work. Maybe it goes sideways, breaks down again. I'm not looking to be overly aggressive with this one, and looking to let that one work just a little bit more just because we just got in it. Google, looks like we're probably going to get stopped out of this if we get that pullback that we are looking for. Let's actually just adjust this a little bit lower. The low here from 12.9, the low is 737. Our stop is in place, I think it's right at, it's like 736.70. So let's bring it down to 736.50. All right, so just adjust it down slightly in case we get a nice little retest of that low. Not really giving up much. You can see we're only in 5 shares. And just so you know, you're going to see a discrepancy between these numbers and what's in the model portfolio. It's because you're in my personal trading account right now, and this is the shares and the allocation that I have, for each of these trades. So here, you can see consolidated. If it breaks down, we're out. It's, again, very simple process. Just let them consolidate, draw boxes and lines, and follow it to the best you can. Here, HOG, again, is another new one, just kind of letting it work. All right, if you were super aggressive, you could probably bring your stop down here to 48. Again, I'm just going to let it work for a little bit and see if it could stay below this trend line. If it starts to get extended from the trend line, then I will look to trail my stop even more. All right, so that's another way you can look at things. APC, here's your trend line. Starting to get extended from the trend line means it's running on us. That's where you want to start locking in those profits. All right, HOG, close to the trend line, just letting it work as best we can. MCD, all right, here was the trade. You can see that breakout from a daily chart. And then you can see here another small box developing, and potentially we have the opportunity for maybe another small box developing. So if we get a breakout over this 117.60, we'll be able to trail stop up to 115 and lock in at least a scratch trade on McDonald's. All right, but again, breakout from a weekly and a daily pattern. Here we have what are we at? Microsoft. All right, so Microsoft went sideways, broke out, consolidated again, broke out, all right, and it really just consolidated that breakout. So here again, I'm letting it work, just looking for it to stay above the 50-day moving average. Obviously, I would love to see it turn around and break out over 56, but until that happens, my stop is down here around 52. Again, if you want to be aggressive with it, you can move your stop up 53.75 or so. For me, I'm just going to let it work. NVS, Novartis, another one that's working for us. Short trade, you could see coming into this key support area. So we knew we were going to see some resistance here around 84. All right, but essentially what's it doing? Box. All right, and now maybe looking like it wants to go ahead and break down again from that box, which is great. We've trailed stop up to that level. Okay, 86.50. Looking for now another breakdown and a continued move to the downside. Owen, Illinois, OI, again, another new one for the list, or for the portfolio, I should say. All right, here you go. Moving to this, consolidating on the weekly chart below the 200-day moving average. We got the breakdown from the weekly. It then consolidated on the daily, got the breakdown on the daily. So we're going to trail our stop ever so slightly on this one to just a little bit closer to that breakdown area. Let's call it 1980. All right. Next level that I'm looking at, honestly, is right here. And with the way it closed on Friday, you could probably move to there, 1850, if right now if you wanted. But for me, I'm just going to kind of, because it's a new trade, because it's still close to the trend line, just want to let it work. Look at how far extended we are from the 200-day moving average. That is a concern. It's a concern that maybe we get a little bit of a rally back, but it's possible that we get a rally back to 1850, the bottom of the box, and then roll over. So I'm not convinced that 1850 is the top of this next box. All right, so that's why I'm giving it a little bit more room and letting it tell me where that top of the box is. All right, here we are. POT, another nice trade for us. You can see broke down from the weekly and the daily, had this nice 3-day move right here. That then becomes a nice little box. All right, and that's where we move stop to. So now if you want to be aggressive with it, because it is breaking down, this could be a potential A, B, C, D pattern. All right, where you would have the move from here to here, would then get added on to here to here. So if we look at that, 20, let's go, just make it easy, 20 to 1850. So then take $1.50 from 1750. So this could go to 16. Okay, that's the way I'm looking at this. But with a nice move that it had on for us on Friday, just looking to let this one work. All right, this one looks like it has more downside in it. I don't want to get stopped out on a little blip back above Friday's high. All right, so I'm just kind of being a little bit more patient with this and letting it work. But those are the positions we're in. You could see that we are in only 1, 2, 3, 4 long trades for the trading account. Here's how they all shake out. Long trades as a total down $263. Short trades as a total up $831. Total P&L for the portfolio right now $567. But we have realized an $1,100 loss already for the month of December. But again, that's what we realized. It doesn't take into account anything that we have in the as reserves or in the open P&L. So if you take and add the open P&L with what the account is valued at, you'll come up with $49,912.99. So as I said, we're down about $80 for the year, if we were to close out all of our trades right here, right now. Now, as far as any potential new positions for this account, let's take a quick look at the 52-week highs. There were a few. Adobe we're going to go over. I went over it in the free video tonight, but Adobe we're going to go over. This is setting up very nicely for a move higher, but not just yet. You could see it did break out over that 93, but got rejected. And the last one, Smith & Wesson. I don't know why I missed this one. This was a great trade. This would have been, money in the bank at this point. And you can see here, this is the point I have with you guys, is this is one that's running. Okay, so there's no reason, if you're in this trade, your stop needs to be 22.30. All right, take the money, you go. It's a trading account. All right, but this one was the exact perfect trade that we were looking at, so it kind of bothers me that I missed it. But you could see, it consolidated on the weekly, consolidated on the daily, broke out. So this was a trade we could have got in. I mean, we wouldn't have gotten in until the next day, which would have been 20, and maybe that's why we didn't take it. 20.85, our stop would have been 18, and we would have already made $3. So we already made 1.5 R on the trade. Again, unfortunate that we missed it, but it would have been a nice trade. But that's just to go to show you that you can still take long trades, just have to understand what's going on in the market. Now look at all these short trades that are, or these 52-week lows. There was a couple that I went through. We're not going to take any new ones at this point because I'm happy with what we have. But let's just start with something reasonable. All right, the ones that are down 10%, I'm not entering those. COG, this was one that we exited this week. Sure enough, setting up again. So if you want to get in again, go ahead. For me, I don't like to necessarily get back in them. I just like to have them set up the first time. But here's a perfect example. If you were a little bit more conservative and didn't trail to the stop that I did at 17.11, you could have still been in the trade, move stop lower, 18, and now looking for it to break down again. Okay, we'll just thumb through these real quick. Gulfport continuing lower, GameStop, not really our setup. All right, so a lot of these look like they broke down, obviously, to 52-week lows, but it looks like they're doing it fairly extended on the charts. And that's one of the reasons I'm not looking to take these. Those stops are a little too wide. Remember, I don't really like to do more than a 10% stop. I like to try and keep those tight. BX, here's one that maybe potentially sets up for us. All right, so BX group or Blackstone group. All right, there's your weekly chart. Here's your daily chart. It broke down. You could put a stop in right here around 32. But again, stock's trading almost 28, 28.50. So for me, a little bit of a too wide of a stop. All right, I like to keep my stops a lot tighter than that. Devon looks like it's breaking down. All right, LM like Mason, but look at the run that it's had. Okay, to get to where it is. All right, we need to see it consolidate a little bit there. NSM, and I go through these. I do them real time. All right, I haven't looked at these yet, so this is just my process. I think this is important for you guys to understand how I come up with these. This is exactly how I just go through every night, boom, 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 and I just look at each chart and I can just tell you right off the bat if it's setting up or not. All right, and all of these are extended, 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 extended. All right, they're not consolidating. Here's one we're in, Potash. All right, PCAR. This is maybe one you want to get in. All right, again, here's your stop area, 47. Here's your little consolidation. Okay, but I can't draw a trend line. Okay, the trend line doesn't intersect with it because the logical trend line is right there. All right, so that can't be my stop because it can come back up the trend line and easily go lower. Not my kind of trade. APC, we're in. Okay, APC working out very well. Murphy Oil and Gas, Credit Suisse, nothing, extended, extended, extended. All right, there's no consolidations on the daily chart. Santander, not really my style. All right, and I like I said, I kind of weed out right off the bat. CF, we're already in. You can see the difference. All right, look at the difference between CF. Right, how it went sideways, trend line set up, broke down from a defined pattern. Look at that difference compared to ADM. All right, there's really no defined pattern. Look at the weekly chart. Weekly chart was the breakdown was all the way up here. All right, look at it's run all this way. Not my style, not my trade. For other people, maybe it's your trade. Don't tell me. I don't want to be the one to tell you what your trade is and what it's not. But this is one that you gotta kind of understand on your own. Here you can see Mosaic. Mosaic similar to CF. Okay, let's remove these. But this is one more along my style. All right, here's the trend line to the downside. Here is the consolidation. Did we get a breakdown below the lows? We did. Okay, where's our stop? Our stop's right here. So here we go. All right, this is a potential trade. Mosaic. Very simple. It's trading to the downside. It broke down from the weekly and a daily pattern. Okay, here's your weekly pattern. Your daily pattern starts right here. Okay, breaks down. Stop. Where's the stop? 32. Let's call it 32. Let's just make it easy. 32.50. All right, get in the stock 29.50. Your stop's 32.50. You're risking a little under 10%. That's more like my trade. So we'll revisit that. If I'm going to take the trade in that, I'll note it in the nightly recap. Mosaic is a potential. Qualcomm, again, not really consolidating on the weekly. Next. Okay, I like to have those really well-defined consolidations on the weekly, and I like to see the breakdowns. Okay, when they start looking like they're just falling out of bed, I'm usually a little late. All right, here's another one, Canadian Pac Railway. You can see the weekly chart looks great. Okay, nice consolidation, a breakdown, but where's your consolidation on the daily? You can't consider this 3 days a consolidation on the daily, at least in my opinion. DVA, RDN, AXP. Okay, this is one we put out for free members the other night. AXP was a potential. Okay. St. Jude's. That one looks like it's maybe setting up, but not really getting the breakdown that I would look for. All right, I would look for it to close at the lows of the day, not necessarily rally back. Tyco extended. FFIV, we're in. NOV, extended in my book. Hog, we're in. Here we are. Colfax, where would your stop be? Stop would be right around this 28 area. $5 on a $23 stock. I'm not doing it. All right, it's just not worth my risk. Okay, it just comes down to that. What you have to look at these as what is worth me risking my money for these trades. A 15% wide stop, not mine. Okay, so the only one I would look at here is Mosaic at this point. Mosaic, I think, worked out very well. Let's just take a quick look back at that trade, and then we'll move on. All right, Mosaic, you can see the stop is in place. Nice little consolidation, breaking down from the weekly and daily patterns. All right, so if that's a trade you want to take, let's take it. Let's set our stop 32.50. And we'll take the trade. So entering at 29.50 and exiting 32.50. Let's head on over to the position calculator and type it in, MOS. You've got to be careful because this is very similar to Potash. So if both of them rally, if Potash rallies, most likely that Mosaic would rally. 32.50, okay. Position risk, just about 10%, 10.5%. We're putting in a total investment of $2,300. Okay, so that's that trade for Mosaic. Now, as far as the remainder of the account goes, the trading account, we had a bunch of exits this week. All right, we essentially exited OGE, ACE, ATI. Let's just go over the three that we exited two that we exited on Friday, OGE and ACE. All right, ATI stars, you should already be out of those unless you're trading it differently than I am. But let's just take a quick look at those. So OGE we went over in the free video, but essentially it moved back above this consolidation that we were describing. Had a little poke above it, Sure enough, came right into trend line, and that was where it was rejected. So, of course, probably could still be in it, but we took a nice little $50 profit out of that one. And the last one, ATI. You can see here that we got extremely pinched to the short side or to the long side on Thursday, and exited it again a Thursday during the day. But, up 14% in a day, you can't do anything about it. It was inevitable to hit our stop. Our stop was right around 13.10 and traded all the way up to 13.75. So it was a good exit at the time. We'll see how that reacts. But a couple good ones that we got out of, you can see here, ACE we got out of on Friday as well. All right, this was one that we were trading to the long side. Sure enough, moved back below our 113.25 stop, got out of the trade. All right, that one we took an exit in, and you see, we had some big losses this week. LUV, big loss on, I think it was Tuesday or Wednesday. All right, we talked about that, down almost 10% in a day, but it was a good exit. Look at where it is now; it's even lower. Good exit. I'm happy with that. It was, had to happen. On the flip side of things, we had a couple nice little profits. COG we talked about. CAR was another one that we exited. Okay, and this was one that just rallied back above the previous day's high. Got out of the trade. Sure enough, came back, hit the trend line to the downside. Looks like it maybe wants to roll over. So this is what I talk about. To the downside, I'm not usually going to have these big gains, but we came right into a potential support area. I wanted to trail my stop up tight, and in case it rallied back against us, that's exactly what we're doing. And we're just taking the little nibbles out of the short stocks and looking for a little bit more of a runner on the long trade. So, I'm just not as comfortable being short as I am long. That's how I am personally. Some people like being short only. Some people like short stock trades only. That's not me. I grew up I like things to go higher. I like seeing green than red. But again, at the end of the day, we use these short trades to really balance out the portfolio and look to go ahead and profit a little bit to the downside. So they're a little bit of a hedge against our portfolio. But I tend to take my exits in my short trades a little bit quicker. I'm not saying it's the right way. If you have a little bit more risk tolerance and you're a little bit more patient, you could definitely let them come back against you a little bit and look for them to form another box, look for them to break down, trail your stop just as we would a long trade. So that's one of my goals for 2016 is I want to start to be able to develop my short style a little bit more and let it, react. But, my concern is always that we're going to have trades like ATI that you're letting it work and all of a sudden one day it's up 15% in your face and there's really nothing you can do about it. So that takes us through the whole trading account. As I said, for this week in the trading account, we closed out of we closed out of 9 trades this week. All right, and out of those trades we took a just about a $700 realized gain loss. All right, so again, not the best of things, but all of our exits seem to be acceptable at this point. We'll see how the market reacts this coming week. As far as core accounts go, we'll go through those positions now. As I said, we are going to be exiting FISV and TSN for a nice gain. But let's take a quick look at those. Okay, and then we'll go over our watch list as well. All right. Let's close this. Let's extend this. All right. So Clorox, all right, working. I mean, we did have a pullback this week, but it's still above the 50-day moving average, still above trend line, still above our 120 support area. Let it work. Let it continue doing what it's doing. DPS, similar situation, still above trend line, still above 50-day moving average, still above 85.47. What we're looking for at this point is for these stocks to pull back, identify future support levels, and then obviously continue moving to the upside so we can use those support levels as future stops. All right, DPS doing just fine. FISV, all right, went sideways. We were looking for it to hold up over 93. Didn't do it. Sure enough, pulling back. And we will exit this trade in FISV, as I said, for about a $50 profit on the trade. Home Depot, all right, had a nice breakout, consolidation. Now looks like maybe it wants to come back, test the 50-day moving average. That's perfectly fine. Remember, we're in these for the long term. We want to try and stay in these as long as we possibly can. 3-4 months is ideal. So we're going to have periods that it's going to pull back. It's not just going to stair step its way higher. We're going to have periods of pullback, and we just want to make sure that they're not too deep of a pullback that we're going to give back a lot of our gains. L Brands, all right, we trailed stop up in this one to 94.75, right below the 50-day moving average trend line. As of right now, everything looks good. All right, here you can see LMT, perfect example of pulling back to the trend line, to the 50-day moving average. Here we are sitting right at the 50-day moving average again, a breakdown under 214, and we're out of the trade. Altria, all right, I would love for this to hold on just a little bit longer, pick up that dividend over here on the 21st of December, but we'll see how this reacts. This could, it's already broken the 50-day, it's broken trend line, so the only thing still on its way is this 56 level. Doesn't look too promising, but we'll see how this reacts going forward. And now our exit back here on our trading account position doesn't look so bad. All right, NOC just continues to move sideways, similar to LMT. Just you could see these levels that we've used as stops, looking for a nice breakout over the 190 area for it to continue higher. PSA was actually up on Friday. Great to see that. All right, here you could see nice consolidation, trend lines in place, 50-day moving average. We're hoping to get there, and we were paid a dividend of $1.70 on the 11th, so that'll probably hit your accounts shortly, next couple weeks or so. Starbucks just going sideways. All right, you can see here a breakdown below this 59.50 area, 59. That essentially takes out the 50-day, which is already taken out, the trend line, and the previous support area. So that would be a reason to exit that trade. SWK, all right, looking for this, trying to figure out exactly where this trend line does exist. It could very well be something along these lines. All right, so we'll just have to keep an eye on this. But here you can see 50-day moving average. It did break back into the box, but 50-day moving average trend line and this 104 area still in play. TSN, you have a choice. TSN, you could obviously take a little bit off, let the rest run. You could, wait for it to consolidate. For me, this is a hell of a run, honestly, in a stock that, look at how far away the 50-day moving average is. There's really no other area of support to use besides this $50 level. For me, I'm just going to take it. All right, I'm going to take it off, see if it sets up again, and then try and get back in. But this looks like a reversal pattern to me, and I would like to just take my money and go. TSS, here, if this was a trading account, we would be out of it on this breakdown. But you can see 50-day moving average still in play, and this 51.18. So this has obviously broken the accelerated trend line, the primary trend line down here. We're definitely not waiting for it to get down to there, but we're going to use this 51 area as our stop. If we would have been able to get a breakout over the 57 area, then we would have trailed stop again to that level. So exiting TSN and FISV on Monday for these. As far as the watch list goes, I did add a few names into the watch list. Adobe, we spoke about before. Nice looking breakout, or tried to break out, but a nice looking setup. Boeing, another one, okay, consolidating right below a key level here around 14 or 149. All right, looking for that breakout. We do have some resistance at 157, so that'll be something we'll keep an eye on, but it is setting up nicely. And you'll notice that a lot of our watch list has been pared down a lot. We took a bunch out, so we're down to just some names that continue to work, and that's exactly how the watch list is supposed to be. We just continue to set it up every week. We see what we get, what kind of breakouts we get from it. And if we don't get the breakouts and instead they break down, they come off the list until they set up again. All right, very simple. GE consolidating. You can see it already broke out of the weekly pattern. Now looking for it to break out of the daily pattern as well. GIS. All right, this is just a sloppy one, but you can see here if you kind of squint your eyes a little bit and take all these drawings off, you can see that it has consolidated on the weekly chart. All right, still consolidating on the weekly chart, and you can see that it also is consolidating on the daily chart. All right, so this is one that The problem with this one, in my opinion, is there's no trend line. Okay, so it's just going sideways on both accounts. So if you get the breakout over $60, say, there's really no way to mark your third. Maybe you could do something like that, but there's really no way to mark your other aspect of setting your stop. So this would be one that's a little interesting. This has earnings coming up on the 17th, so we wouldn't be able to take it this week anyway, but it's on the list just to be on the list. Here, INTC. All right, big pullback reversal. Now looks like it's maybe consolidating right below this 35 area. And what I like to see here is this nice tight consolidation. Pullback, broke higher, now consolidating again. And you can see right here, there is that setup. A breakout over 35.50 would be the trigger, and a breakdown under, let's call it 33.50, would be the exit. Okay, what else do we have on the list? L3 Communications. All right, again, big pullback, now back above the 200-day moving average, consolidating on the daily chart. And here are those levels. 127 is the breakout, 118 is the breakdown. Right through there is your stop, and you also can see here is a valid trend line. And actually with Intel, I didn't draw it, but here is the valid trend line in play. Okay, so that one, both of those look very good for potentials. PAYX, all right, has broken out of the weekly consolidation. Oops. All right, something through here, had a little blip to the downside, broke out, and now looks like it may be consolidating on the daily chart. You can see right through there is their trend line, and I just love when they just work like that. You just kind of snap it to two lines, and the third line, it just sits right on it. All right, but here is that setup, PAYX, and there you go. 55 or 54.50 is the breakout. Under 52 is the breakdown. Again, this one has earnings, so let's just be mindful of that. RTN, all right, this is one that we were in at one point, and you could see it's just continuing. Oops, I want to leave that there. I want to duplicate. Continuing that level. And here you can see breakout over 128 and stop under 121. This was one we were in for the trading account. Got stopped out of it on the move back below this tight little consolidation here. And again, it had already broken out of a weekly pattern. So this one just looks like it wants to continue higher. Nice looking setup there. And the last one that's in addition to the list this week is SJM. And here you can see SJM weekly chart consolidated, broke out. Now on the daily chart, looks to be setting up for a continued move to the upside. And again, those levels, 124.50 is the breakout, and around 118.50 is the breakdown. Trend line, again, difficult on this one. I would say at this point it's way down here. So, kind of take it as you get it. I would say SJM and GIS are the toughest probably to pull off for a nice trade to the upside. But, all our other names on the list, I will include this list. I'll export it right now so I actually don't forget. And we will put that right in the nightly recap. So other than that, that's it for this weekend. So we got a lot going on. We took a bunch of exits in the trades. We're entering a new trade for the trading account in Mosaic to the short side. I will note that in the nightly recap. We're also added a bunch to our watch list this week, so I'll note all those additions to the watch list. And we are exiting TSN and FISV in the core account. So lots going on. Again, hope you guys enjoyed this one. Any questions or comments, leave them in the comment section below, and we'll see you during the week. Take care.